In the last part of the video, I introduced you to our financial statements, the income statement, statement of retained earnings, balance sheet, and even the cash flow statement. And now we're going to start to prepare them. So we're going to solve problem 1.3a. You can download this problem from tonybell.com. All my problems are there. I just want to show you, because I'm kind of proud of my website, how boring and simple it is. Let's see, tonybell.com. Where are you? There you are. Oh, let me bring it down here. So you go to the website. There's nothing going on here. I'm proud of my boring website. And I'm particularly proud of this. You go Financial Accounting Workbook. You just click on it and it pops up. There's no, I don't ask for your email. I don't ask you to sign up for anything. It's a free PDF. So there you go. And so it's useful for you. The reason I have it there is because it's useful for you to work through these problems with me. Okay. Sherry Shuttles is a bus company offering rides to outdoor adventurers. In the summer, she caters to mountain bikers and in the winter to skiers. Sherry's company has the following account balances, all on December 31st, 2029, and for the year then ended unless otherwise noted. And there's a bunch of accounts, and it says, give me an income statement, give me a statement of retained earnings, and give me a balance sheet. Before we can do that, we need to identify our accounts. So if you did problem 1, 2, and if you didn't, for goodness sakes, go back and do it. We learned to identify accounts as asset, liability, shareholders' equity, revenue, expense, or dividend. If it's an asset, is it current or long-term? Same with for liability. Let's do all that for this problem. So buildings are, of course, assets. Oops, I want to change to a red pen here. And buildings are long-term assets, right? Long-term asset. Maybe I need a slightly smaller pen. That's just a little too wide for me. Let's try this one. Yeah, that's much better. Buildings are long-term assets. Wage expense, well, that's an expense. Shuttle revenue, we shuttle people up and down mountains. That's what we do to earn our money. That's revenue. Bank loan payable, long-term liability, right? We assume, unless we're told otherwise, bank loans are long-term in this course. Accounts receivable, current asset. Office supplies, those are also assets, and they are current. They're things you own or control that are good to own or control. Utilities expense, those are expenses, those are costs. Repairs expense, also expenses. Wages payable, those are liabilities, and somebody's unpaid wage you're going to pay in less than a year, so those are current liabilities. Now, if you're wondering the distinguishing between wages payable and wages expense, I do go over that in problem 1.2. Wages expense is the amount of wages over a given period, months or years. Wages payable is the amount of unpaid wages you have on the specific date. So on December 31st, how much do I have in unpaid wages? So our wages for the year were like 35 grand. Our unpaid wages at the end of the year, 3 grand. Okay, moving over, fuel expense, that is an expense. Dividends are dividends. They are their own class of transaction. Equipment net, we'll worry about the net comment in problem 1.4. But for now, just, okay, that's a long-term asset. It's just ignore the net. Just go, okay, it's equipment, long-term asset. Common shares, shareholders' equity. Accounts payable, those are current liabilities. Think of your phone bill. In terms of equity, common shares and retained earnings are 2 equity accounts. Again, accounts payable, current liability. Insurance expense is an expense. Depreciation expense is an expense. Cash is a current asset, the most current of current assets. And retained earnings is a shareholder's equity account. And at that point, we have classified all of our accounts. So part A says, good job classifying those accounts. Please make an income statement. So let's make our income statement. The income statement is the summary of revenues and expenses, and revenues minus expenses equals net income, as discussed previously, right? So we want to summarize our revenues, expenses, do it in a logical way, and we want to format it properly. Formatting is everything with these financial statements. Let's start, though, with our revenues and expenses. So I'm going to highlight my revenue, and I'll undo this highlighting shortly, so I don't know if it's a good idea for you to highlight. Well, leave it to your judgment. I'm going to highlight all the expense accounts. Expense. expense. Any expenses over here? Yes, there are. Expense. Expense and expense. Okay, that's all of my revenues and expenses. I believe I have all the information I need. I need to prepare a set of financial statements. So let's start with our income statement. And to do it, we need a 3-line title. The first line, and every financial statement will have a title like this. The first line is the name of the company. The name of this company is Sherry's Shuttles. Sherry's Shuttles. The second line of our title is the name of the financial statement. This is going to be called an income statement. Again, often called a statement of operations, but I think the simpler name is better. Now I'm trying to center this. I've clearly missed the mark. Let me move it over. It doesn't have to be perfect, right? Your professor's not going to expect perfection. If you're doing it in a word processor, of course, just center it. But otherwise, yeah, do your best. And then the third line is a date. And with an income statement, we want to put some specific terminology around the date. And the question gives it to us. It says, give me an income statement for the year ended December 31st, 2029. And so the date is December 31st, 2029. With an income statement, you need to say a time period, because we can have income statements for months or quarters or years. Those are the typical things. When I say month, well, it's a month. When I say a quarter, that's 3 months. January, February, March would be the first quarter of the year. And years are obviously 12-month periods. And why is that important? Well, remember what an income statement says. It says, how much money are we making? Well, if I ask you how much money you made, I have to say, how much money did you make last night? How much money did you make last month? How much money did you make last year? That is, it's time period dependent, right? And so when I'm looking at Apple's financial statement, I'm comparing them to Amazon. Well, I don't want to compare Apple's quarterly statement, 3 months, to Amazon's 12-month statement. So we need to tell financial statement users, am I looking at the one for 3 months or am I looking at the one for 12? So in this one, we're looking at the one for 12. So we have to tell shareholders that. We have to say, for the year ended, and then give the date, December 31st, 2029. Now, your professor may allow you to use shorthand here. I'm going to write the whole thing out today just because, it's in the video, but you could write DECE 31 or 1231. It's going to depend on the professor. Okay. So we said the income statement is the summary of revenues and expenses. Let's start with revenues, and let's start with a heading. So again, if this was my piece of paper, just in the sort of left side here, I write a heading, revenues. And under revenues, I'm going to write shuttle revenue. And our shuttle revenue was $140,000. I'm going to write it over towards the right-hand side of my page. Beautiful. I've done my revenues. On to expenses. Now, let's do our expenses. As far as expenses go, I'm not particular about order, particularly in this 1.3a. I get a little pickier as we go, as we move into more complicated financial statements. For now, though, I think just list your expenses as you see them, and I think you're okay. So I'll start with wages expense, $35,000, just the top one on the list. Utilities expense, then repairs expense. I forgot to put the amount. And 35, 14, 13. Now this is interesting format-wise. I write these on the left, 35, 14, and 13. This is something where I'm following along with certain textbooks I use, and different textbooks format differently, different companies format differently. So this is sort of the way I have my students format, and I do dock them marks if they don't format properly. The idea here is when we have a list of sort of similar items, I list them on the left and I total them on the right. And so the yellow line is for like lists of numbers. The right line is for totals. Some students get confused here because debits go on the left and credits go on the right, as you'll learn in a future chapter, and they think this is debits and credits. It's not. It's just lists on the left, totals on the right. So let's continue down, and you'll see I kind of follow that rule through my financial statements. Your professor might be slightly different in how they format, and that's okay. This is the way we're going to format in my videos, though. So continue listing our expenses. Fuel expense, $10,000. I think I saw insurance expense next. I glimpsed it. I did 12, and depreciation is 21. Okay, so there is all of my expenses. I'm going to want to total my expenses. How do I total them? I add them up. There's no trick here. Let's go through it. I can go 35,000 plus 14,000 plus 13,000 plus 10,000 plus 12,000 plus 21,000. Okay, it's $105,000. That's my total expenses. Well, we said at the start of this, revenues minus expenses equals net income. That equals the profit. How much money did the company make? And good news, it's a positive number. 140 minus 105 is $35,000. And we said there's a name for that, net income. So did this company make any money? Yes, they did. They made $35,000. Is that good or bad? We don't know. Because last year they made 100 grand, we'd go, oh, 35, that stinks. If last year they made 5,000, we'd be like, oh, it's going in the right direction. That's good news. So we don't know if 35 is good or bad. We have to see previous years for this company. Hit it with a double underline. The bottom line of all financial statements gets double underline. That's a formatting convention. And we want to put dollar signs as well. I'm going to put my dollar signs in green ink. You don't have to change ink colors. I just want to show you where we're going to put it in my class. So you can see there's two columns here. There's sort of the left column and the right column. The top number of each column gets a dollar sign. So there's $2 signs. And anything with a double underline gets a dollar sign. So in my class, our income statement will always have 3 and only $3 signs. Top of the right column, top of the left column, and then beside net income, the bottom line, anything double underlined. Well, there's only one thing double underlined here, and that's our net income. And there we have it. We've solved part A of Sherry Shuttles. I can see I've gone on long enough for part A. So I'm going to cut this one here, and in part B, we'll probably do both the statement. We'll probably do the rest in part B, statement of retained earnings, balance sheet, and a bunch of ratios. But hopefully you're off to a good start. We have a beautifully formatted income statement. And as always, if these videos are helping you, I hope you'll help me by hitting one of those buttons. All right, we'll get back to the problem in our next video. Thanks for watching.